Okay, everybody, it is me, Gregory Mannarino. It is Monday, June 20th, 2022. The market is closed today. This is my newest segment of Markets A Look Ahead. People, I want to start off with reading something to you. This piece that I'm going to read is an article that I wrote which will appear in the Trends Journal. It will come out Tuesday, but you're going to get a little preview here because I feel like it's very important and you need to know now. So bear with me here. As I said, I want to read this and really pay attention to what I am outlining in this. All right, here we go. Currently, the European Central Bank and the Federal Reserve are engaging in emergency/unconventional measures to stabilize the debt and credit markets. All right, this is no secret. We witnessed some incredible, actually unprecedented action in the debt market as of late. Let us move forward here. Okay, these actions came about after an uncontrolled sell-off in the debt market, which caused the 10-year yield to spike. All right, we all went through that. I covered it here in this video. The current actions of central banks are intended to get more cash back into the stock market. Will it work? I guess that is the question here. I can't tell you the amount of emails I have gotten over this weekend. It's unbelievable. There's a large group of people out here. I'm not done. I'm going to continue to read. There's a large group of people out here who believe that very soon this market will in fact be hitting new record highs. Now, I'm not calling anybody out here. Everyone's entitled to their own opinion. I'm just letting you know what I am hearing. So a lot of people believe market's going much higher. A lot of people also believe this market is crashing right now. There's a whole other group of people who, again, believe market's going up, followed by a large crash. I'll talk more about that as I read through this. All right, so going back. Over the last 6 months, the U.S. stock market has fallen. And just last week, the S&P 500 did fall 20% from its all-time high, the definition of which is a bear market. Beginning the end of last week, the S&P 500 got slammed, falling very hard over several trading days. And the 10-year yield, pay attention to this, the 10-year yield made an uncontrolled spike all the way up to 3.5% from a previous 3.12. People, are you ready? That's a 38 basis point spike higher in 2 trading days. That is unprecedented. I've never even heard of it before. Okay, let's move forward here. Now that the actions of the European Central Bank and the Federal Reserve have, at least for now, stabilized or caused some kind of a stabilization in the debt market. We watched that 10-year yield plummet as of late, okay? Going back to what I just said, many people have written to me who believe that at least temporarily, because of the actions of this unprecedented, what are they saying here? Emergency and unconventional methods being used by central banks to stabilize the debt market, prevent it from, fragmenting. Okay. So a lot of people writing to me as of late who now think, at least temporarily, cash will make its way back into the stock market, followed by a very large drop. I just covered that. Others think new record highs are just around the corner, and a whole other group of people believe that the stock market is in fact crashing as we speak. Now, what these central banks are now engaging in has certainly caused bond yields to drop substantially. I said almost miraculously. Okay, a 30 basis point drop in the 10-year yield occurred just in 1.5 trading days. You really believe that's just the average guy and the average girl running out there saying, hey, I got to own the debt, I got to buy it? No, obviously this is central banks, quite obviously. Okay, this action has caused the debt markets to stabilize. However, okay, the cost of what the central banks are doing right now is much, much higher inflation as they themselves continue to inflate, which is what? The goal of central banks, to continue to inflate. All right. All these central banks are doing, okay, this is important, are exacerbating or making worse the current issue, which is a full-on debt crisis. We are currently in a full-on debt crisis. If we were not, the European Central Bank and the Federal Reserve would not be utilizing emergency and unconventional measures to stabilize the debt market. Okay, so how are they attempting to fix the current issue? I'm laughing. Well, by adding more debt to the debt crisis. That's exactly what they did during the last meltdown here. Therefore, exacerbating the underlying problem itself. They are not fixing anything. They are, in fact, making it worse. I believe that despite the current actions of central banks to stabilize the current debt credit markets, all this will do is push it off. It will push off a meltdown in the debt markets, credit markets. Henceforth, why central banks are resorting to this emergency posture right now. With that, pay attention to this part, okay? With that, I still believe that the market capitalization of cryptocurrencies will balloon once the debt market finally does implode, which it will. All they're doing is pushing it off, and they're making the issue worse. All right. I also believe that the price of gold, silver, and other commodities will skyrocket. As for the stock market, I firmly believe that an implosion in the debt market will eventually occur despite any actions being taken by central banks to push it off. And this will cause stock markets around the world to melt down. Like I said, this is going to show up in the Trends Journal. It comes out on Tuesday. I think it's very important. Now, moving forward a little bit, we just found this out over the weekend. So I just outlined for you, European Central Bank has resorted already to some kind of emergency posture to stabilize the debt market. Now, over the weekend here, they are accelerating this. Let me read this to you. The European Central Bank to accelerate its emergency policy to prevent a fragmentation in the debt markets. And the Federal Reserve, we know this, is now resorting to unconventional means to prevent the same thing from happening, which means they're going to also accelerate whatever they are doing. You know, it's this big mystery here. Look, obviously the Federal Reserve is clearly involved yet again in buying debt to the point of, it's just astronomical amounts of sums of cash. They're just being created out of thin air, and they're buying the debt. Again, you don't get a 30 basis point plunge in the 10-year yield because that's the regular guy and regular girl out here buying the debt. Sorry, not happening. Oh, we also found out, by the way, that on average so far, the Franken-Mummy administration is sending $130 million per day in military aid to Ukraine without any kind of oversight via the American people or Congress or anything else. And that number, that $130 million a day, is about to get much, much larger. Again, crisis to crisis to crisis. That's just the game. That's the new world order economic model. Crisis to crisis to crisis, so they can strangle to death whoever is left in the middle class here. A grand elimination, an extinction event. We are experiencing an extinction event today with regard to the middle class. And what are people doing about it? Nothing. The boiling frog syndrome. They've been dumbed down to the point of no return, and they're just going to go away. Now, we also heard a few other things I wanted you to pay attention to over the weekend here. So Janet Yellen, are you ready for this? Her words, a United States recession is not at all imminent. What she won't tell you is we are way beyond a recession, okay? She also went on to say that U.S. inflation is, in fact, unacceptably high. She can't accept it. Meanwhile, she's one of the creatures that helped inflate. You understand? Okay, that's the job of central banks, to continue to inflate. She also she expects the U.S. economy to slow. Here's another piece of information you want to know from my German friends out here. The producer price index in Germany just skyrocketed to 33.6%. It's the highest ever. As we all know, people, this inflation issue is global, okay? This is not just a phenomenon that we are experiencing here in the United States. A lot of people are being lulled into a big, fat, ugly lie, and that is that this is, in fact, just a United States issue, and it's our retarded president who's responsible. No. This is central banks who have deliberately done this. World leaders around the world, they're all puppets, okay? It doesn't matter who sits behind the Resolute desk. You all know this. It could be a farm animal. It could be some, I don't know, whatever you want it to be. It's just a figurehead for people to look up to, some kind of a savior deity. In the case of certain people, they look at the president in that way. And unfortunately, this is now every man and every woman for himself. It's a struggle for survival, all right? As central banks continue their charade, their scheme to continue to create a two-tier society and an elimination of an entire class of people, extreme haves, extreme have-nots. You all know that. Anyway, people, so that's where we stand today, all right? I sincerely believe that we are in the very early stages of yet another surge higher in inflation. Again, the crisis, New World Order mechanism will cause central banks to continue to inflate via any mechanism that they can possibly come up with. They're not going to stop inflating. They will use any mechanism that they can make up, whether it's wars, expansion of wars, another disease process, whatever it is here. And I want you to be prepared for that. With regard to what central banks are doing right now, these emergency, in fact, accelerating the European Central Bank, their emergency measures to stabilize the debt market, well, let's see how that plays out. Federal Reserve is obviously doing the same. If they manage to keep rates low, looks like they're going to be able to pull it off, at least in the short run. Let's see how that affects the stock market. But I can't imagine yet again that at least in the short run, we're not going to see inflation surge. And whatever central banks are doing right now is massively inflationary. Understand, they can't just say it. They have to create fiat currency out of thin air. Have to get in here and buy all the debt. People are being lied to on a truly epic scale. No one really is being allowed to understand what's going on or why. This is, again, a new world order, a one world government being run by central banks, an absolute complete elimination of a class of people. We are going to lead up to, absolutely, a completely new financial system, a slave system much greater than the one we have now. So I want all of you to be more than prepared for that. With regard to everything else, people, just keep our eyes on it. Let's see where this goes here. And we got each other's back. We always do. And that's the most important thing, is we're out here, we're together, we're trying to make sense of what seems to be absolutely incredible. An environment of distortions, an environment of lies, an environment that I don't think any one of us has ever seen before in the history of the world. And we can expect things to continue on their twisted, distorted pathway moving forward. All right, people, look, with that said, I'm going to end this video. I hope it's been important. I hope you got something out of this article here that I wrote. Pay attention to what I said there. Honestly, this video is free. Listen to it again. Go over the concepts I covered in that article I wrote. Again, it will be out in the Trends Journal. If you are not a Trends Journal subscriber, I would suggest you do it. I write these articles for the Trends Journal for free. I get no compensation whatsoever. I do it because I believe in Gerald Celente. I believe what Gerald Celente is doing. And he's a real guy. I think you are all well aware of that. All right, with that said, again, I love all of you. We need each other more than ever. We got to stick together more than ever. And I will see all of you tomorrow. The market will be open tomorrow, which will be Tuesday, June 21st. Have a great rest of your day, and I'll see you.